Okay, okay, okay. Good morning, everyone. Uh, Welcome to the session on IndAS 113, uh, fair value measurement. Okay, so good morning, Balram. Good morning, Sandhya, Gauri. Yes. So IndAS 113, fair value measurement. Good morning, Sumit Jain. Okay, yeah. So first, we shall start with what is the need for having a separate standard on fair value measurement. And then we will proceed to evaluate what IndAS 113 wants to tell us. Okay. So with this, let us commence. See, under the previous regime, that is my IGAP regime, there was no concept of fair value as such. Okay. So under the IGAP regime, there was no concept of fair valuation as such. Although you did have certain standards that permitted revaluation of assets, it was not as pervasive as the way it is in IndAS. That is why under the IGAP regime, the accounting standards which you would have studied, there was no dedicated place for fair valuation. There was no dedicated standard on fair valuation. Coming to the IndAS regime, you would have studied over the past couple of weeks. Coming to the IndAS regime, fair valuation is a pervasive concept. Okay, fair valuation is a very pervasive concept. Pervasive means what? It is present in many places in the standards. So example, well, you take IndAS 16 revaluation model. You take IndAS 40, you will have to disclose the fair value of the property. You take IndAS 109, financial instruments, equity should be fair valued mandatorily. You take standards like IndAS 19 on employee benefits, plan assets should be stated at the fair value. So all these places you are having applications of fair value coming in picture. Okay, now because all these places have applications of fair value, what the standard setters felt was, see, there are two options. First is, in each of these standards I will explain how to calculate fair value in the respective standards themselves. But if you look at the literature of, say, IndAS 109, it's already bulky standard running into hundreds of pages. Along with that, if you want to put in more and more literature relating to fair valuation, the standards will only become more and more bulky, but there is no value add as such happening to either of these standards, because what is there in IndAS 16 relating to fair value measurement principles, the same would go in IndAS 40 as far as disclosure is concerned. The same would go in 109. So the standard setters thought, let us do one thing. For all the standards, there is a fair valuation requirement. We will instead keep a separate standard on fair value measurement. So wherever the standards are silent about fair value, they will obviously refer to IndAS 113. They will tell in the standard, fair value has the meaning as defined under IndAS 113. Fair valuation will happen in accordance with IndAS 113. And that's it. So what was bulky pages is now reduced to one or two lines of references in each of these respective standards. And we have a new standard in its place. The source of this IndAS 113 is obviously your IFRS 13, which deals with fair value measurement. Okay, so this was the reason why we have a separate standard on IndAS on fair value measurement that deals with how to calculate fair value. Okay, so when we first study IndAS 113, probably many of you would have an opinion and understanding that IndAS 113 is a standard. I will put my asset class or liability or equity through IndAS 113. For example, property, plant and equipment needs to be fair valued. I will put it through the principles of IndAS 113, and when it comes out, IndAS 113 will give me the fair value of property, plant and equipment, which is unfortunately not the case. IndAS 113 does not prescribe the fair value. It only gives the principles. It only gives me the principles of fair value measurement. See, we have a very beautiful regime right now, which is a principle based regime. What do you mean by principle based regime? You are given principles. You are given principles, not rules. Okay. So as long as you follow the principles to give a true and fair view, it is considered that you have complied with the standards. It is considered that you've complied with the standards. If you were given the rules, then rules can be bypassed. There may not be a rule to cover each and every possibility that is there in the practical world. But in the case of a principle-based regime, apply the principles to any case in the practical world, and you will be able to ensure compliances with the accounting standards. And therefore, we now have a principle-based regime. The CPA, the Certified Public Accountants in the United States, they follow a rule-based approach. Okay, so that is just a difference between the two regimes. Ours comes from United Kingdom. Okay, so it comes from the UK. So we follow a principle-based fair value measurement principles. Okay, now coming to the proper standard. ये तो हो गया introduction. Okay, coming to the proper standard. Okay, coming to the proper standard, fair value. Fair value. We have to remember that this is not a magical number that comes into existence through IndAS 113. It is a computed value. It is a computed value. See, your academic life, the questions will give you the fair value in the question. In real life, it's not that simple. In real life, you will have to compute the fair value using the principles of IndAS 113. Okay. So how can I calculate fair value? We have to first understand ki bhai, what is fair value. So the standard gives a very beautiful definition of fair value. Okay. The definition goes something like this. It is the price. It is the price that is received on sale of an asset, or on transfer of a liability. It is a price received on sale of an asset or paid on transfer of the liability in a transaction between market participants. In a transaction between market participants. Okay. And in an orderly transaction. In an orderly transaction. We will discuss each of these items in deep details. Okay. In an orderly transaction at the measurement date. At the measurement date. So these are 1, 2, 3, 4, 5, the 5 most important legs of your definition of fair value. A very comprehensive and wholesome definition of fair value is given to you. Okay. So now when we come to each and every point of this, we will now go ahead and understand ki bhai, what exactly fair value is. Today we will be covering the fair value principles, the definition of fair value in detail, and if possible I would like to touch upon fair valuation of non-financial assets. So tomorrow we will be left with fair valuation of financial assets in brief, and you will be having liabilities and equity in the class on Saturday. Okay, so now look at the definition. It is a price. It is a price. Which price, sir? It is the price that you will receive on sale of an asset. So the first thing is on sale of an asset, or the price that you have to pay to transfer a liability, or the price you have to pay to transfer a liability. Means what? It is an exit price. It is an exit price. Exit price bole to, exit price means you are valuing the asset or a liability, equity also included. Okay. You are valuing them based on the fact that, based on the presumption that you are going to sell this asset or you are going to transfer this liability. So we call it an exit price. Sir, does it mean fair value will be calculated only when we sell the asset? Answer is no. You may have to do a fair valuation of property, plant and equipment because you follow the revaluation model. Will you sell the property, plant and equipment? No. But मुझे करना है fair valuation. I have to do a fair valuation. So I will fair value that particular asset as if I am selling that asset. So from the perspective of the sale of an asset, the fair value will be computed. So that is why we call this as an exit price. We call this as an exit price. Okay. We do not look at entry prices. We do not look at any other price. Our thought process will be, I have to value this asset. कैसे value करेंगे? As if I am interested in selling it, as if I am interested in selling it. So if I am interested in selling my asset, kitne pe bechta? What would I sell it for? So that is the way your thought process goes about. That is the way your thought process goes about. Okay. So today we will primarily be discussing the ins and outs relating to an asset, because it is easy to understand. Okay, so once you get the principles of fair valuation in your fixed in your heads, then we can discuss liability and equity, and then we should be through with the chapter. Okay, so today's discussion, I'll purely be focusing on assets. Okay, so now suppose we have multiple examples. Okay, so suppose we are going to discuss fair valuation of a parcel of land, of a piece of land, Now, let us imagine and build concepts around this fair valuation, which will help us to understand this definition in totality. Okay, so now suppose the value of land, the land has the following details: area 1 lakh square meters. 1 lakh square meters. Okay. And you are in the business of residential complex construction. Residential complex construction. Okay, you are having this plot of land. So therefore, let us now understand ki bhai, how the fair valuation of this land is going to happen. Why do I need to fair value? Well, I'm following the revaluation model. So therefore, I want to fair value this land, or I have kept it as an investment property. I do not know what I'm going to do with this land. I may either rent it out, or I have just kept it for capital appreciation. Mujhe nahi pata. So therefore, IndAS 40 requires a fair value disclosure at each balance sheet date. That is why I will have to do a fair valuation. So all these cases could be the reasons why fair valuation becomes mandatory. So now let us understand, how do I do the fair valuation? Understand the principles. Don't look at what is the value. Don't go into the numbers game. Understand the principles. Okay. Now, what the standard tells. This land you are valuing. You will think of fair value as a price. Price for what? Price to sell this land. Sir, am I selling this land? No, you are not. मगर आपकी सोच वैसी होनी चाहिए. You have to think in the perspective that if I sell this land today, what am I going to get? To whom will you sell this land? Presume that you are selling this land to a market participant. Okay. So now let us understand. I am not selling this land. The land will remain with me even after the fair valuation exercise. But when I proceed to do a fair valuation of this plot of land, मेरे दिमाग में यही सोच रहेगी, अगर मैं बेचूं तो मुझे क्या प्राइस मिलेगा. It is a thought process. That is why we call it an exit price. So price to sell this land, how much? So when I start to imagine this, when I start to think about this, the first question that arises is, what is the feature of this land? What is the feature of this land? When I talk about the feature, or what are the features, what are the characteristics of this land? First one, is it an agricultural land? Is it an agricultural land? Is it a non-agricultural land? Is it an orchard zone? 1 second, please. Is it an orchard zone or a green zone where no construction is permitted? Is it a settlement land? Is it permitted for residential construction? Is it permitted for commercial construction? What exactly is the feature of this land? So we are looking at which characteristics? We are looking at asset specific characteristics. We are looking at asset specific characteristics. Okay. Now, what does it mean? Suppose I am in the business of residential complex construction. मैं बनाता हूं residential complexes. If it is a residential complex construction, the rate of this land would be about 75,000 rupees per square meter. This is the rate which is running in the market. But suppose it is a commercial complex. If it is if it is permitted to have a commercial shopping mall or office spaces or shops, etc., obviously the commercial premises will have a greater value. So if it is commercial, it will fetch 1,20,000 per square meter. हो सकता है. It is quite possible. If it is an agricultural land where no construction is permitted, probably it will fetch 30,000 per square meter. If it is an orchard zone, probably it will fetch 25,000 per square meter. Okay, so on and so forth. You are having the various pricings which are there. So the question you are going to ask is, what is the nature of this asset? What is the nature of this asset? You may not be carrying on agricultural activity. You may not be carrying out commercial complex construction. But when you are going to sell your asset, that asset which you are going to sell, that asset is going to determine the value that it can be sold for, the characteristics of that asset. Suppose you are having this plot of land where even the commercial construction is permitted. You are going to do only residential because my expertise is residential. मुझे commercial construction नहीं आता बनाने को. I do not have the team. I do not have the expertise. But if you want to fair value this land on which commercial construction is permitted, tell me, my friends, and now you have understood. Now that you have heard the definition, you tell me, should the value be 75,000 per square meter, or should I look at 1,20,000 per square meter? Given that the asset permits commercial construction, though you are not suited to do a commercial construction yourself. So now tell me, in your opinion, what should be the fair value of this land? Should I go ahead with 75,000 or should I go ahead with 1,20,000? What do you guys think? Okay. Srishti, your question being an exit price for one entity is an entry price for the other. I will be discussing this on Saturday. Okay, I'll be discussing this on Saturday. That is the last part of our IndAS. Okay, so I'll be discussing that on Saturday. I have a dedicated slide also. Okay, so Srishti, Manini, Kaushiki, Sindhwani, all of them are saying it should be 1,20,000. Sumit Jain is saying it should be 75,000. Okay, any other different answers? Girish, good morning. Uh, okay, I got 3 answers, 1,20,000. Others? Okay, please give in your answers. Okay, so understand, you have a plot of land. You have a plot of land. Forget the fact that you are into construction business. मैंने investment किया. I invested this land. This land happens to be in the heart of the city. And now I want to sell this land. You do not do any construction activity. You do not carry out anything. You had just bought it for the sake of your investment. Now this land is in the heart of the city where commercial complexes are being constructed. So when you go to sell this land, my friend, are you going to think from the perspective that, yaar, I am not doing any construction, so I will give it at a low rate? You will obviously not think from that perspective. You will think from the perspective that, yaar, market rate kya hai? What is the market rate? Why will you do favors to somebody? If you want to sell this land, you will look at the highest rate of the lands which are sold in and around your location, and you will quote at least the highest price. I'm repeating, at least the highest price. You can go higher than that, but you will quote at least the higher price. So what decides the fair value is not the business of the entity. What decides the fair value is not the business of the entity, but the nature of the asset. So therefore, if I want to value this land, the correct value will not be 75,000. 75 is my restriction. Mera restriction hai wo. If I sell it to a market participant, he can do a commercial construction on that. If he does a commercial construction, he can get 1,20,000 per square meter for the land itself. For the construction, he will charge extra. So the worth of your land is not 75,000 to a market participant. The worth of the land is 1,20,000 to a market participant, and therefore your land is going to be fair valued taking 1,20,000 per square meter into consideration. Have you understood, Sumit Jain, Aniket Jain? Yes. Why it is 1,20,000? Yes. Okay. So this is the fundamental premise behind fair valuing an asset or a liability. You have to think from the perspective that I want to sell this asset. You are not selling. I am repeating, you are not selling. But the presumption is it is an exit price. So when you look at an exit price, you will not look at entity specific restrictions. You will not look at entity specific restrictions. I have a restriction that I can construct only commercial property, but so I can construct only residential property. But to whom I am selling, he can build anything that he wants. So therefore, you will look at the values and you will determine that the fair value is going to be 1,20,000 per square meter. Okay. So now the first principle, ignore entity specific restrictions. Ignore entity specific restrictions. Instead, you will look at asset specific restrictions or asset specific characteristics. What is the feature of this asset? That is what you are going to be interested in. Acha, let me build on this example further. Suppose this piece of land is situated in is overlooking the sea, So you know that sea views are all a very premium category segments. Okay, these are all very premium category segments. If you go to a place like Delhi, probably AeroCity or Vasant Vihar and all these localities would be very premium localities. Okay, in your city, wherever you guys are, imagine a particular posh locality. That will become an asset specific characteristic. In fact, the location of that asset will determine what will be the selling price of your property and therefore the fair value. So you will focus on entity specific characteristics. You will not on asset specific characteristics. You will not focus on entity specific restrictions. Suppose the one to whom you are selling, he has a restriction that he cannot construct commercial. Will you sell the asset to him? You will tell, why should I sell to you and make a loss? I can look at other players in the market who are actually into commercial construction and I can sell it to them. So my fair value won't be 75k, it will be 1,20,000. There is an umpteen number of buyers and sellers in the market, and therefore I will go into that category of understanding how the valuation of my asset will happen. Okay, how the valuation of my asset will happen. So this is the fundamental premise of fair valuation. It is an exit price. You will look at not entity specific characteristics. You will look at asset or liability specific features. Asset or liability specific features. Okay. So Srishti Goyal has asked a question. Sir, we ignore entity specific conditions. Then why are we thinking from market view? Market is also an entity. No, market is not an entity. Market is not an entity. Okay, just a second. Yeah. Market. What is a market? Market is a collection of buyers and sellers. Market is a place where buyers and sellers come together to exchange goods and or services. So you cannot call market as an entity. Market is a collection of sellers. It is a collection of customers. And therefore you will look at the best possible price that you can get. Okay. So therefore, when I look at a market participant's view, my thought process will be that I'm selling this asset or transferring this liability in a marketplace, in an appropriate market. Okay. Now, let us move on to this piece of land again. Okay. Today's case will have lot of these discussions. Then when we look at the presentation and the theory, I think we can just be able to rush through with the understanding. Okay, so don't worry. Now coming to this asset. Okay, land has a public road crossing it. Okay, so if this is your parcel of land, okay, if this is your parcel of land, this is the public road. Okay, this is the public road. ऐसे ही बनाया था. Okay, it was done at that point of time that this public road continues to exist. Okay, so this particular area marked in blue is a public road. Now, is it an advantage to have a public road through your land, or is it a restriction or a disadvantage? Is it a restriction or a disadvantage? Come on, tell me now. Having a piece of a public road means anybody can come. Okay, anybody can come, cross this road. They will almost be having access to your property on either sides. It's a public road. Nobody can put any restrictions. So now tell me, is this going to be an advantage or a disadvantage? It will be a restriction. It will be a restriction. Forget commercial, even for commercial reasons. Will this be an advantage? I don't think so, because any unwanted elements can come, access this road, thereby get access to your property, and therefore they can trespass on your property. So it is a significant restriction. Okay, it is a significant restriction. So when I am selling this plot of land, in effect, this restriction also goes. So what will happen is you are transferring land plus the restriction, or what I can say is land plus the disadvantage. दोनों चीजें जा रहे हैं. The asset is also going. Asset ke saath saath the disadvantage also is going. So this is an asset specific disadvantage. This is an asset specific disadvantage. So when it is an asset specific disadvantage, do you think you will have to factor that in the fair value of your asset? Now tell me, simple sa question hai. When I am transferring this asset which has an access road in between, the asset is getting transferred. Uske साथ साथ that public road access also gets transferred to the buyer, which is a significant disadvantage. So now when I have to think about fair valuation, can I do the valuation thinking that I am transferring only the land, or should I think that I am transferring the land plus the restriction? What do you think? Land plus the disadvantage. What are you transferring? Come on. Manini, I was discussing your question only. That is why I did not address it specifically. Okay. Since you had asked a question, sir, if asset specific restrictions are there. Come on, guys, respond. Jay Srivastav is there. Good morning. Girish, yes. Srishti, yes. Kaushiki, I'll come to your query. I'll come to your observation in a short while. Okay. Srishti, Sumit Jain, Aniket Jain, Balram Ved, Sandhya Gauri, what do you think? Should we consider? Yes. So I'm getting the answers. We should consider the land and the restriction both. And when you consider land and restriction both, it is a significant disadvantage, and therefore the value of this land will automatically come down. So suppose this land had a value of 1,20,000 without the restriction, without the disadvantage, okay, plain land. Then it may come down to suppose 95,000 with the land plus the disadvantage. Land plus the disadvantage. And therefore, what will be the fair value of land for you now? The fair value of this land for you will not be 1,20,000 because you are not transferring the land itself. You are going and transferring that inconvenience along with the land, and therefore 95,000 will be the fair value. Okay, coming to another observation, we shall now look at the positive side. Suppose you have constructed a mall. Okay, you have a mall. In the mall, you have lot of shops or commercial spaces. Okay, you have lot of shops or commercial spaces. Some of the shops are located inside. Okay, are located inside the mall. Some of them are road facing. You see all these typically clothes stores like West Side or Patani, God knows whatever, yeah, Blackberries, any clothes store, Max or whatever it is. Yes, these cases, do you think that the fair value of shops inside and the road facing shops, will they be the same or will they be different? This is a significant advantage, as Kaushiki had mentioned to us in the discussion. This won't be a disadvantage, but the sad part is you do not get a view to the customers who are traveling outside. So I won't call it as advantage, rather a disadvantage. I will call it as absence of advantage. So when I value these spaces, they will obviously be different. So suppose the value for this is rupees 1 lakh. Road facing shops will be 1,05,000, for example. Okay. In all these cases, the reason behind taking these examples is I want you to understand that we are looking at asset specific restrictions or asset specific advantages. We are not looking at what the entity thinks about it. We are not looking at entities facing entity specific restrictions, entity specific advantages. Okay, we are looking at the nature of the asset. Suppose you have a 40-storied building. If you look at the pricing of the 40 stories, the upper floors will be costlier than the lower floors. Two reasons. One is upar ka construction will be costlier because you need to put in the cranes, etc., etc. Second is it gives unparalleled views. Okay, so you look at these what you can say, you look at the ads of these developers like Rahejas and Patani who all are there in Mumbai. They will give you obtain unrestricted views of the sea from the tranquility of your 40th storied apartment. So that 40th storied apartment is going to be a premium priced apartment because it is giving the access to a view which no other floor can give you. And that is why it will be priced high, because it is an asset specific advantage. It is an asset specific advantage. So this is the fundamental understanding behind fair valuation. We look at the nature of each asset and or liability that we are selling or transferring, that it is presumed that we are selling or transferring. I may not sell at all. For all I know, I will never sell this property. I will never transfer the liability. But when I do a fair valuation, the presumption of the standard setter is that I am transferring this liability, that I am selling this asset. Okay. And basis that the valuation will happen. Basis that the valuation will happen. Is it clear so far? Any doubts? Manini, yes, fair value is 1,05,000. That is right. Srishti Goyal, price of road facing shop will be higher. That is right. Are you guys getting the understanding? Yes, Srishti has confirmed. Others, Balram Ved. Okay. Anything else? Any other observation or anything else that you are facing a difficulty? Kaushiki has confirmed, Jay has confirmed, Sudhir has confirmed, Soham. Okay. Balram, all clear? Sandhya, all clear? Yes. Okay. So now with this background, let us proceed further. Let us proceed further. So we have now covered two parts of the definition. First part is, it is the price. So when I say price, it talks about exit price. Price to sell an asset or transfer a liability. So it is an exit price. Okay. So we've covered two limbs. Now it is a transaction between whom? Between market participants. Between market participants. When I talk about market participants, it specifically means that you are selling it to unrelated persons. That means it will be a fair transaction. When I say unrelated, means you are not selling it to your parent, to your subsidiary, to your associate, to your directors, to your key managerial persons. कोई भी relative नहीं है. You are dealing with unrelated persons, and therefore we call it as a transaction between market participants. I want this value to be fair. When I transact with related parties, there is almost always a presumption that कुछ तो गड़बड़ है, कुछ तो गड़बड़ होगा. There will be some element of suspicion in a transaction between related parties. Why are you going to sell to a related party when so many unrelated parties are available is the first question that arises. Okay. So there is some degree of suspicion. So when I talk about market participants, it specifically means unrelated persons. Absolutely right. So this is a transaction at arm's length. Okay. We move ahead, sir, but sometimes genuinely we would be having a transaction with related parties. Well, if you are able to substantiate that such a transaction was at arm's length, fair enough, that will also come in your fair value definition or reasoning. Okay, that will also come in your fair value definition or reasoning, that transactions with related parties at arm's length will also be considered for fair values. But in general, market participants is the preferred source for determining your fair value, Coming to the next part, sir, we covered price, we covered exit, we covered market participants, and now we come to the most important part of this standard. We come to the most important part of the standard. Sir, kaha bechoge? You are telling us to presume that this asset will be sold. Where are you going to sell it? So the standard tells, think that it is sold in the appropriate market. In the appropriate market. Sir, ये अच्छा है. जब कुछ भी defined नहीं हो, you get terms like prescribed method, appropriate market. Okay. Is there a definition or understanding to this appropriate market? There is. Appropriate market is of two types. One is the principal market. And the other one is most advantageous market. So now let us try to understand why this concept of appropriate market came into existence and what do we understand by principal market and most advantageous market. Let us now try to understand. I need your answers now. Consider that you are a fruit seller. You are growing mangoes. Your mangoes have a market in India. Your mangoes have a market in India. You are also exporting your fruits. Now you tell me, this market in India and export, will the pricing be the same or will it be different? Come on, I need your answers to this. Will the pricing be the same or will it be different for sale within India and for export sales? What do you guys think? Kaushiki is saying it will be different. Srishti is saying different. Aniket is saying it will be different. It will be different. Okay. Suppose you are selling your mangoes at rupees 1,000 per dozen. This could trade anywhere between 1,500 per dozen to 2,000 per dozen. It is natural. Any export transaction may the prices will be higher. So the question is, sir, to fir what is the market? Should I consider the Indian market? Should I consider the export market? That is the question we will have to think about. Which market? See, within India, I am selling to unrelated parties. Outside India also, I am selling to unrelated parties. Arey to kaun sa price lu? Which price should I take? Question mark. Okay. Another example. Suppose you are holding shares of TCS. And you have to do a fair valuation. TCS is traded on the National Stock Exchange, on the Bombay Stock Exchange. Tell me, will the pricing of TCS equity shares on NSE and BSE be the same or will it be different? Yes. Avija, Sumit, Sudhir. Okay. Girish will come to that later. Okay. I will discuss that concept in a while. Okay. Jay is saying different freight. Okay. So now TCS equity shares on NSE and BSE. Will it be same or will it be different? Come on, guys. It will be slightly different. Roughly the same, yes, but slightly different तो रहेगा, थोड़ा different रहेगा. पैसे की बात करो, even 5 पैसे is a difference. Yes, यकीन नहीं आता, today itself, if you have the time, buy one TCS share by placing an order on NSE. At the same time, you place the order on BSE. दो terminals है, you place an order and then you look at the pricing. It will be different. It has to be different. It will be different. There will be a small difference. It won't be a huge difference. There will be a small difference, but difference rahega. Difference will be there because they are two different marketplaces altogether. So now the question arises, sir, to kaun sa price le? Which price should I take? Okay. All right. So what I mean to say is different markets have different pricings. So the question that arises is, which marketplace should I think about for fair valuation? And here IndAS 113 steps and gives you the principles. It tells us that you take the fair value of such a sale transaction, assuming that you are selling in the appropriate market. And for the purpose of appropriate market, it says that appropriate market is the principal market. Appropriate market is the principal market. We'll come to this. What is principal market, etc., blah, blah, blah. We'll come to this. Appropriate market is the principal market. If no principal market exists, if no principal market exists, comma, you look at most advantageous market. Don't sit, write anything, understand the concept. Notes are all given to you. You can just be relaxed and understand the concept. Okay. If no principal market exists, you will move on to the most advantageous market. So in other words, when I look at the most appropriate market, the first preference will go to the principal market. If principal market does not exist, only then we will look at the most advantageous market. वो सब तो ठीक है sir, all of that is fine. आप बताइए तो सही, what is principal market? So now we come to the principal market. Principal market. Okay. Principal market has a very simple definition. Okay. It is that market having highest number of buyers, highest number of sellers, highest number of transactions, highest number of transactions. Okay. Compared to any other market in question. Compared to any other market in question. For the commodity to be fair valued. To be fair valued. So principal market is very simple. That marketplace where you have maximum number of buyers, maximum number of sellers, maximum number of transactions compared to any other market in question for the commodity that is presently being fair valued. You would have seen this definition even in another place. Okay. Perfect competition. You remember what is perfect competition, guys? कभी सालों पहले, सदियां पहले, you would have studied it in economics. when you were doing probably your foundation. What do you mean by perfect competition? It is a marketplace where there are maximum buyers and sellers having an understanding and awareness of the product that is being bought or sold in such a way that an individual buyer or seller cannot influence the prices. In such a way that an individual buyer or seller cannot influence the prices. Perfect competition, you would have studied, is the most efficient form of market. Most efficient form of market. Because everybody knows product ka worth kitna hai. Everybody knows. Okay. Everybody knows. So ultimately, your pricing in a perfect competition will tend towards a single value. No individual buyer or seller can बाजार पलट नहीं सकता वो. He cannot change the pricing overnight because there are so many people who will buy and sell that ultimately you have to fall in line and move towards the pricing that others are doing. So that is your perfect competition, which is an analogy that is applicable to the principal market. In the principal market, the variation in prices will be hardly anything. It is a perfect competition. There is maximum number of buyers. Buyers are aware what they are buying. Maximum number of sellers. Sellers are aware what they are selling. The buyers know the true value. The sellers know the true value. Individually, you cannot affect the market. Okay. And transactions are the maximum. If these conditions are fulfilled, then the price of the commodity in such a market will be your fair value. The price of the commodity in such a market will be your fair value. This will be your first preference, okay, for fair valuation. There will be something extra to calculate the fair value. We'll come to that, but the first preference will be this, okay. First preference. Is it okay? Any doubts? Innumerable buyers and sellers. Absolutely right. Manini in economics. Yes. Okay. So are you guys clear with principal market? Yes. So to come back to this question, a transaction of TCS on NSE and BSE. What will be my principal market? Well, on a given day, you will look at where the maximum trades have been executed. Typically now it is the National Stock Exchange. And because it is the National Stock Exchange, NSE will be your principal market. The price in NSE will tend to be your fair value, will move towards the fair valuation. So that is how you will determine the fair value in a principal market. Okay. All right. If in the market a single buyer can influence, nahi ho paega. In a principal market, Manini, you cannot have what you can say, a single buyer influencing the market. Okay. I'm happy Srishti is asking questions. Okay. She's asking what if a huge quantity is sold. Okay. Excellent. So now let me come to this TCS example only because I'm discussing that. Okay. TCS is traded. I'm not tracking it, but suppose it is traded at 3,000 per share in NSE. This is the maximum transaction wala market. So 3,000 per share should be the price in your NSE. Suppose there is a bulk deal. You know, bulk deals are executed. Okay. You know, sometimes certain bulk deals are executed on the marketplace. So bulk deals means Suppose I have in NSC, on NSC, there is a bulk deal being executed where 5 lakh shares of TCS are sold. 5 lakh shares of TCS are sold. When 5 lakh shares of TCS are sold, do you think the price will be 3,000 per share? It won't be. It is a bulk deal. The price will be, for example, rupees 2,900 per share. The price will be 2,900 per share. So now when we talk about 2,900 per share, you will now tell me, sir, एक एक दो शेयर 10 शेयर 15 शेयर 20 शेयर 20 25 शेयर small quantities, the price that is being quoted is 3,000. In a bulk deal, the price which is quoted is 2,900. For even 10 20 25 large number of transactions, both are aware. Bulk deal, definitely both the parties are aware. So now, which price should I take? Both have happened on the principal market. So now tell us, which price should we take? If I'm not wrong, this was what the question Srishti has asked. And now we come to our fundamental understanding. What are you valuing? Sir, I'm valuing an asset. Okay. So what restrictions and advantages should you look at? Sir, we should look at the restrictions and advantages of the asset in question. We should not look at any entity specific characteristics. Okay, we should not look at any entity specific characteristic. This price of 3,000. This price of 2,900, the gap of rupees 100. Be careful now. I'm asking a question. Answer this carefully. You will get the answer yourself. This discount of 100 is given because of what? First one, TCS price is discounted, or the second reason is holding of 5 lakh shares transferred at once between two parties. Why? What is the reason for giving this discount? Is it the fact that TCS shares are available at a discount at that particular price of at that particular point of time, or is it because of the transfer of a holding of 5 lakh shares? What do you think? This discount of 100 is being given for? Is it given for the inherent nature of the asset, or is it being given because of the sudden huge quantity that is being transferred? Because it is a bulk deal. Exactly. It is a bulk deal. It is not a normal transaction. In other words, you tell me now, this, is it asset specific or is it entity specific? What is this? Is this second option where you are selling a bulk quantity at a discount, is it entity specific or is it asset specific? Come on. Yes, because of the holding, transfer of holdings, bulk deal. Balram, Ved, all are giving me good answers. So now you tell me, is this particular holding of 5 lakh shares, आप bulk में quantity transfer कर रहे हो, you are transferring a bulk. You are not transferring just shares. You are transferring a bulk quantity of shares. Is it asset specific? Is it entity specific? It is not asset specific. It is entity specific. घड़ी घड़ी आपको कोई मिलेगा नहीं 5 लाख शेयर्स ऑफ टीसीएस खरीदने बेचने वाला. You will not find it. In the entire day, there may be 1 or 2 bulk deals at the max. Okay. You look at the news reports, there will be just a couple of bulk deals. So the bulk deals are not a representative of asset specific characteristics. They are a representative of entity specific holding feature, and therefore will you consider 2,900 as your valuations? Answer is no. It is a one-off abnormal transaction because it's related to a restriction between the two entities, and therefore we ignore that. The pricing will be 3,000 per share. The pricing will be 3,000 per share. You have to look at what is the driving factor behind the prices. Is it the asset or is it the quantity which is held? If it is the quantity which is held, that will be an entity specific restriction. That cannot be an asset specific restriction. Okay, so 3K will tend towards your fair valuation. Okay, so excellent. So Manini gave me the answer, Avija gave me the answer, Sandhya, I hope you are clear. Aniket, I hope you are clear. Jay Srivastav, Balram Ved. Entity specific here does not mean TCS. Entity specific means the party which is holding 5 lakh shares who are transferring it. Okay. Entity specific means the transaction between participants. Okay. So that is how it looks like. Okay. Now, coming to the next part. There was one student, Kaushiki, yes, Sindhwani, who spoke about bargaining power. Let us now come to the example of land. Let us now come to the example of land. Land की बात करते हैं. The land was available. We come back to the same case. 1 lakh square meters at rupees क्या था 1,20,000 per square meter. That was the pricing I took. I think so. Yes. 1,20,000 per square meter. This is the price which is ongoing in your surroundings. This is the price which is ongoing in your surroundings. Okay. All right. Now, coming to our transaction where you have A Limited holding this land, you have B Limited wanting to buy this land. Between them, a deal could be made for say rupees 1,15,000 per square meter. This was possible because of the persuasive capabilities, the bargaining power of B Limited's managing directors, So now again you tell me, and tell me honestly, is bargaining power asset specific or entity specific? Kaushiki, what do you think? Others also chip in with your answers, but this question she had asked. Okay. Entity specific. So will you consider the fair valuation as 1,15,000? Obviously no. Your market price is having a value of 1,20,000. So you will consider 1,20,000 while doing the fair valuation. Bargaining, bulk deals, huge quantities, quantity discount, whatever you are giving, these are all transaction between entity specific restrictions or features. We will have to exclude that. Basically, I cannot color my fair valuation principles on any individual entity. I'm going on a very, very macro level and telling that we have to look at the market prices. Is it okay? Yes. So have we gotten a good understanding of principal market? Did we understand assets? So for first thing, have you understood what is the principal market? Have you understood what is the principal market? Yes. Have you understood what is an asset specific advantage or an asset specific restriction? Have you understood what is an entity specific restriction or an entity specific advantage? Have you understood that we have to consider asset specific restrictions only and ignore entity specific restrictions? Yes, if all these questions are understood, we are on the right path. Okay, we are on the right path in understanding IndAS 113. Okay, excellent, excellent. Thank you, everyone. Okay. All right. Now, appropriate market can be any market. Suppose you are holding 24 karat gold, then you would be having commodity exchanges where the price of gold is published. So that would be an appropriate market. Okay. So the principal market. So we discussed the principal market. We discussed the principal market. Now the question comes, what if principal market does not exist? What if principal market does not exist? Sir, we look at the most advantageous market. We look at the most advantageous market. Fruits, vegetables, typically your products like perishables, books, etc. These do not have a principal market because you look at your fruit sellers, there is no common marketplace where all the fruit sellers have to mandatorily come. They can sell from any place to any of the customers. Export also they can do. So there is no common marketplace as such. Okay. So you won't be having a principal market. You won't be having the principal market. Okay. So Soham Bakre is asking if we are having bulk of an asset, will we see the normal price or the bulk price? Soham, tell me your answer, beta. Bulk of an asset is an entity specific price. Will you consider entity specific pricing? No, sir. So what are you going to consider, sir? You will consider the normal pricing because it is, we cannot let entity specific transactions guide our valuations. Okay. I hope you are clear. Okay. All right. Now coming to, if there is no principal market, what are you going to look at? Go for most advantageous market. Go for most advantageous market. Acha, most advantageous market from whose perspective? Will it be from the perspective of the seller or will it be from the perspective of the buyer? Sir, what are you valuing? Sir, I'm fair valuing. What is fair value? Exit price. Exit price means from whose perspective? From the perspective of the seller. So when we talk about most advantageous market, it will be from the perspective of the seller. It will be from the perspective of the seller. So now let us come to the mangoes that we were selling. Let us come to the mangoes that we were selling. Price. 1 second. Domestic. Export. Achha. Now please pay attention. Suppose in the domestic market, your mangoes are priced at rupees 3000 per dozen. आम बिकते हैं, खरीदने वाले खरीदते हैं. Okay, 3000 per dozen. The same thing which you would be selling it in the marketplace, in the export market, that would be, let us assume, 5000. So now you tell me, At this stage, what do you think will be the most advantageous market? Will it be the domestic market or will it be the export market? Sir, right now we feel that it will be export market because export may the price is 5,000, whereas domestic may the price is 3,000. Yes, but your price is X shop. Okay, that means the price at your shop. Ultimately the goods have to go to the buyer, right? So you will be incurring some freight. Don't move into, sir, what if freight is paid by the buyer? What if freight is paid by the seller? Sum total mein whatever has to happen, the price will get affected. Okay, so now ये तो शॉप का प्राइसिंग हो गया. Ultimately goods have to reach the customer. So for that I will be incurring transport cost. So if I incur the transport cost, what will be the transport cost? Sir, suppose for this market the transport cost is, let us say, 100 rupees. 100 रुपए में निपट जाएगा अपना. Okay, whereas for the export market I have to sell the goods outside na. So therefore it comes to 2,500. I have to sell the goods outside. So now I'm left with 2,900, 2,500. So now tell me what remains with me. In domestic, it will be 2,900. In the export, it will be 2,500. Now, what is going to be your most advantageous market? Sir, ab to lag raha hai domestic is my most advantageous market. It is my most advantageous market. And it is absolutely right. You have to consider transportation costs. You have to consider transportation costs. Sir, why do we consider transportation cost? Transportation cost, tell me my friends, transportation cost, is it asset specific or is it entity specific? What do you think? Transportation cost, is it asset specific or is it entity specific? Asset specific. Srishti Goyal is saying it is asset specific. Others? Okay, Manini is saying, okay, I'll come to Manini. I think she has studied already and come a little bit. Okay, asset specific. Anybody else you want to chip in? Yes, Avijay is saying it is asset specific. I'll come to land and building. Okay, I'll come to land and building. Okay. Entity specific, foreign entities only will incur. Soham is saying, Sudhir is saying asset specific, Jay is saying entity specific. Okay, let us understand. What happens with transport? Suppose I am located in the city of Mumbai. I have to reach a market. Sorry, mangoes na, so Mumbai kyun? Ratnagiri. Okay, suppose I am situated in Ratnagiri. Now, if I am selling the goods in the domestic market, I have to transport the mangoes from Ratnagiri to, let us assume, I'm selling it in the Mumbai market. So my mangoes will move from Ratnagiri to Mumbai. What is changing? इधर यहाँ पे तो entity की बात नहीं हो रही है. What is changing is the location of the asset is changing. The location of the asset is changing. And because location of the asset is changing, what are you altering? Are you altering an asset specific characteristic? Obviously, yes. Your asset was earlier in Ratnagiri. Now it is in Mumbai. So the physical location of that asset is altered. So it becomes an asset specific transaction, or it becomes an asset specific condition. Similarly, Suppose you are shipping this from Ratnagiri to United States. If you are shipping this, what is happening? Your mangoes are moving from India to the United States. And if they are moving from India to the United States, अभी तक बिका नहीं होगा. It is just a change in the location. It is a change in the location. And location is what? It is a characteristic of the asset. It is a characteristic of the asset. And because it is the nature of the asset, will you consider it? Obviously, you will consider it. Obviously, you will consider it. Okay. Now, let us move on to another example. Let us move on to another example. Okay. Just pay attention carefully. Try to understand. Okay. You should be able to correlate with the transportation example. Okay. Suppose I have a land with a warehouse, an old warehouse. वो warehouse में कुछ भी नहीं है. It is भंगार, scrap. It is going to, मतलब उसमें आप कुछ नहीं कर सकते. You cannot do anything. Okay. Now, when you look at this warehouse and the land, practically warehouse is not going to have any existence. Warehouse is not going to have any existence. उसमें आप कुछ नहीं कर सकते. You cannot do anything there. Now, when I have to sell this land, the land you can build a commercial complex. You can build a commercial complex. Okay. That is the most advantageous of the options available. Okay. Yes, I'm explaining this. Location is a nature of the asset, not the entity. If I have to build a commercial complex, what will I do first? I will demolish the warehouse. I will demolish the warehouse. So when I demolish the warehouse, you tell me, am I looking at altering the nature of the asset? Am I looking at altering the nature of the asset? The warehouse is not in some part. It is exactly on the plot of land. If you want to do anything, you have to demolish the warehouse. So you tell me, my friends, altering the nature of the asset, is it happening? Yes. In what way? Demolition of the warehouse. So can I say that demolition of the warehouse is somewhat similar to transportation cost in the sense that it is altering the characteristic of the asset? So don't look at transportation in a very narrow prism and think that transportation means truck आएगा, उसमें goods आएंगे, goods जाएंगे. That is not what transportation cost is. Transportation cost specifically means a cost which alters the characteristic of the asset, a cost which alters the nature of the asset. So that is the meaning of a transport cost. We discussed mangoes and putting it on a ship and exporting because that is easy for us to understand. If I had to immediately move to the warehouse example, it would probably be difficult to understand initially. Let us move to another case. Let us move to another case. Okay. See, I'll summarize the example of the warehouse. You have a parcel of land. That land has a warehouse on that. Now, the warehouse is old. Warehouse में कुछ भी नहीं है. Okay. Warehouse, if you want to fair value this land, you are not selling it, mind you. You want to fair value this land. So when I look at fair valuing this parcel of land, I will look at it as an exit price. When I look at it as an exit price, this exit price will mean the price received on selling this asset. Okay. So I will presume I'm selling this asset. Okay. Now this asset is suitable for commercial complex. So when this asset is suitable for commercial complex, what am I going to look at? Well, we are going to look at the maximum benefits that will come. So commercial complex is, but do you think the commercial complex buyer will really pay me the entire fair value? He won't, because he will tell, if I buy land from you, I have to break that warehouse. I have to break that warehouse. So if you break the warehouse, see, suppose the warehouse, the land plus the warehouse is 100. Warehouse तोड़ने का 20. Okay. So land plus warehouse is 100 crore. Demolition cost is 20 crores. So you can do one thing. You can tell the buyer, I will break the warehouse and give you. In which case you will first spend 20, he will give you 100, your fair value will be 80. Or what you can do, you can tell, you buy, you do the breaking yourself. The buyer will tell, why should I pay you 100? यार तोड़ने का काम तो मुझे ही करना है. Yes. So therefore I will give you 80 and spend 20 on breaking this thing. So therefore the value will tend towards 80. The value will tend towards 80 because you are altering the nature of that land. Land had a warehouse. You are now demolishing the warehouse. So therefore the nature of land is altered, and that is similar to this demolition is kind of similar to my transportation. Is kind of similar to my transportation. Yes, absolutely right. So demolition cost is similar to my transportation. Sir, तोड़ने की बात क्यों कर रहे हो? बनाने की बात करो. Okay. So suppose I am transferring a division. I am transferring a division. Now, when I'm transferring a division, I am entering into a slump sale. Okay, I am transferring a division. I am entering into a slump sale where all my assets, liabilities, etc., everything is getting transferred. In that assets getting transferred, there is a building which is work in progress. There is a building which is work in progress. So when I talk about a building which is work in progress, what will be the fair value of that building? Sir, how will I do the valuation? If I take the WIP building, typically I will add construction cost to make it a finished product. I'll just put it as FG, but it's a finished product. So this construction cost can also be called as costs to complete. Yes. Can it be called as costs to complete? Yes. So therefore, when I talk about cost to complete, is it altering the nature of this WIP? Is it altering the nature of this WIP? Absolutely yes. So can I say that this cost to complete is in some way or the other similar to the transportation cost? Can I say that it is in some way or the other similar to the transportation cost because it is altering the nature of your asset? And will you therefore consider it in your fair valuation? Yes. Anything which is altering my asset's characteristic will be considered in the valuation, will be considered at the time of valuation. Okay. All right. So now with this example, we close our discussion on the varieties and come back to our case of mangoes. Mangoes are moving in the domestic market or in export market. So we call it as a transportation cost. You are left with 2,900, 2,500. Now, this typically appears that the domestic market is giving you the higher returns, But we move one step further. And look at whether there are any transaction costs. Whether there are any transaction costs. Sir, what do you mean by transaction costs? Transaction cost means brokerage, securities transaction tax, anything specifically related to the transaction that you are going to enter into. So if you look at the transaction cost, this transaction cost is going to be rupees 900, rupees 400. Okay, I'm just kind of taking different cases so that you will be able to understand how exactly or what exactly we mean by most advantageous market. So when I deduct these two things, I'm left with rupees 2000 and I'm left with rupees 2100. What is this 2000? What is this 2100? We call this as net proceeds. We call this as net proceeds. Sir, what do you mean by net proceeds? By transaction, if it gets effected through, if the transaction gets effected through, if the transaction takes place, if you are able to successfully sell your product in the market, in the domestic market, you will have 2000 rupees left with you. In the export market, you will have 2100 left with you. So you tell me, my friends, where am I getting the maximum amount? Where is my net proceeds maximized? Is it maximized in the domestic market or is it maximized in the export market? Tell me. Is it maximized in the domestic or in the export? Sir, dekha jaye to it is getting maximized in the export market. Yes. So if it is getting maximized in the export market, this export market will be considered as my most advantageous market. This will be considered as my most advantageous market. I have not yet come to fair value. Abhi tak we have not even discussed what is fair value. I started my session at 7. It is now 8:30. We have not even discussed what is fair value. We have discussed principles. We have discussed the definition. We are discussing principal market, this market, that market. I have till now not come to what is fair value. Okay. How to calculate. So therefore, the net proceeds are maximized in the export market, and therefore, this becomes my most advantageous market. This becomes my most advantageous market. Now I want you to tell me, Kaushiki is one step ahead always. Transaction cost. Is it asset specific or is it transaction specific? If it is transaction specific, can I say that it is entity specific? I need your answer to these questions. Okay. Transaction cost is transaction specific or asset specific. Brokerage will be determined on what? Typically on your selling price. STT will be determined on what? Typically on your selling price. Is your if you are entering into, if you're looking for rents, you have to pay 1 month rent. So it depends on what is the transaction that you are entering into. So it is going to be a transaction specific cost and entity specific cost. It is going to be a transaction cost, a transaction specific cost. It will be a transaction specific, entity specific cost. And therefore, will you consider this cost in determining the fair value? Will you consider this cost in determining the fair value? Answer is no, you won't. Because yes, that is what I had asked, and that is what Girish also had correctly answered. Transaction specific cost is ultimately an entity specific cost. It is ultimately an entity specific cost because you are entering into the transaction. That means you have decided the price, and basis that price, you are fixing the commission, you are fixing the STT, you are fixing the brokerage. So it is a transaction specific, entity specific cost. And therefore, when I'm doing the fair valuation, when I'm determining the fair value, you will ignore the transaction costs. You will ignore the transaction cost. And therefore, sum total, ये सब चीजें डिस्कस करने के बाद, after discussing all these things, we now come to fair value. Fair value. What is fair value? Sir, fair value will be available price. Available price less transport costs. Less transport costs. Okay? Less transport costs. No. For determining the most advantageous market, we look at net proceeds. And if we look at net proceeds, it is मेरे जेब में कितना बचता है, what will be left in my pocket after selling, after transportation, after transaction. So we will consider the transaction cost for determining the net proceeds. And after determining the net proceeds, we will proceed to determine the most advantageous market. And because we have determined in the export to be my most advantageous market, what will be the fair value? We will have to look at this. My fair value will be 5,000 minus 2,500. 2,500. Sir, but ऊपर देखोगे in the domestic market it is 3,000 minus 100, 2,900. तो क्या हो गया? Your proceeds are maximized in the export market. And because your proceeds are getting maximized in the export market, you will have to consider that market as your most advantageous market. And then you forget the other market. You will then determine the fair value based on the most advantageous market price which you have determined. So 2,500 will be your fair value. Have you understood? Have you guys understood? Okay. All right, sir. Therefore, during the bulk sale of shares, discount was considered as a transaction cost. Yes. So when I say transaction cost, it becomes entity specific because it is related to the characteristic of holding. It's not related to the characteristic of the nature of the asset. Okay, it is related to holding. So it is a transaction related discount. It is a discount related to the entities, and therefore it is ignored. Okay, clear. Okay, Kaushiki is saying okay. Next one, Jay is saying transaction cost is entity specific due to entering the transaction in such goods. No, it's not. Transaction cost is like brokerage, for example. Brokerage. Tell me one thing. How does brokerage alter the nature of your goods? How does brokerage alter the nature of your goods? Securities transaction tax. How does it alter the nature of the share? How does it alter the nature of the share? Does it alter? It does not. It is a cost that is dependent on what you are transacting into. Okay. Transaction cost is a must. Transaction cost will be incurred definitely 200%, but we will consider the transaction cost to determine what are my net proceeds. That's it. That is the work of transaction cost. Transaction cost decides my most advantageous market. It will be considered while determining the most advantageous market. But once the most advantageous market is identified, ignore the transaction cost. Fair value will be price minus the transportation. That's it. Transportation cost is asset specific. Why asset specific? What are the characteristics of your asset? When I talk about nature of the asset, it could mean raw mangoes or ripe mangoes. It will mean the crop. Is it Alfonso or is it, some other brand, whatever you get in your particular cities? What is it? Okay. So therefore, these are asset specific characteristics. Along with that, where are the mangoes right now? Is it in Ratnagiri? Is it in any other place? Does the fact that you have to enter a different market, that you have to sell to a customer who is away from you, does it alter the nature of the asset? Yes, it does. You are moving your asset from one location to another location. Therefore, when I say transportation cost alters the nature of the asset, it specifically means that it is an asset specific cost. Kaushiki, are you still clear or you still believe that it is not an asset specific cost? When I say transportation cost, please don't think that it's only movement of goods. Immovable property demolition can be an incremental cost. So basically, these are costs necessary to bring your asset to the use or to that location where the sale is going to happen. Okay. So when I say transportation costs, these are costs which bring your asset to use or which are specifically incurred to bring the asset to the point where the sale is going to happen. So therefore, they are in fact asset specific costs. Is it okay? Yes. Anybody has any doubts so far? Srishti or kon hai yaar? Who else are there? Who others are there? Please respond. Am I okay? Am I too fast? Am I too slow? Is it fine? Anybody else? Yes. All clear. All clear. Srishti Goyal. Okay, sir, for any commodity, either there is a principal market or there is a most obviously. दोनों में से कोई एक तो रहेगा ही. There will either be a principal market or there will be a most advantageous market. Guaranteed. होना ही है sir. Why? Without that, how are you going to monetize your asset? You cannot monetize your asset. Remember one thing, you are a business entity. When we say that you are a business entity, your objective is to maximize the proceeds from your assets. So you will find a market that does that for you. Okay. All right. Girish is asking, sir, when we have principal market, why do we take the fair value? Look at my first sentence only, Girish. First preference is principal market. If principal market is there is no most advantageous market. If principal market is there, don't even go to most advantageous market. You stick to your principal market. You stick to your principal market. Okay. All right. All right. Manini, if there is a new product in the market, see again, I took example of mangoes as an inventory. I took example of building for us to understand. Okay. All right. Transaction cost. No. Transaction cost is always entity specific. Transaction cost is relevant only when it is entity specific. No. Transaction cost is always relevant, but it is entity specific. So transaction cost will be considered for calculating net proceeds. Baat khatam. You cannot ignore transaction cost. Transaction cost is always entity specific. It is transaction specific, and therefore you will consider it for net proceeds always. But the fair valuation ke liye we will not consider transaction cost. Okay. Balram Ved, for foods we have mandi as a principal market. Not necessary. How do you know that it is the maximum market where maximum sales are going to happen? We cannot really tell that. Okay, so therefore there is no principal market for commodities like fruits, books, vegetables, etc. Because the same product is sold at similar quantities in so many locations. कैसे ढूंढेंगे हम? What is my principal market? There is no principal market. So we go for the most advantageous market. So for mangoes, India is the principal market. Not necessary. In fact, there is no principal market for such goods. Okay, because your transactions can happen across borders. They can happen across anywhere in India. There is no principal market. When I say principal market, maximum goods, maximum sellers, maximum buyers, maximum transactions. You have a market in Mumbai, you have a market in Delhi, you have in Kolkata, you have in Chennai, Hyderabad, Bangalore, etc. कहाँ ढूंढोगे आप principal market? Each of these prices are there in each of these locations. So what is your principal market? How can you find out? So for these commodities, typically there is no principal market. There is no principal market. Is it okay? Yes. Are we clear? Yes. Okay. All well. संध्या बलराम वैद समझा आपको? Who else is there? Manini understood. Avija followed. Kaushiki, are you still having a doubt? Ranadhir, all clear? Okay. All right, fine. Okay. So then with this, you want a break right now, or can I quickly rush through the slides and proceed further? We can rush through the slides just to get an understanding of what all is covered in this 1.5 hour, almost 2 hours. And then we can take a 5-minute break and continue with the questions. Okay, we'll proceed further. I'll leave you before 10. Okay, I'll leave you before 10. Don't worry. Okay, all right. Now, so I have shared this with you. Okay, I have shared this slides with you. I hope it's available. So what is the need for IndAS 113? Well, we have discussed that assets and liabilities could be exchanged at other than arm's length prices. To define fair values, it should be ensured that values reflect all assumptions. To change from, okay, values reflect all assumptions to change from transaction specific or entity specific to normal transaction, which is common for all interested parties. So this is exactly what I said when I told ignore transaction cost because it is transaction specific. Ignore bargaining power, ignore bulk discounts because they are transaction specific or entity specific. So ignore that. We have to come to asset specific features so that we can get asset specific values. Okay. So IndAS 113 helps us to calculate the fair value to give a true and fair view of financial statements. Okay. Next one is objective and scope. Well, what does it tell is its objective is to define fair value, the definition which we have already covered. It is giving a framework for measuring the fair value in a single IndAS. I told you there are many standards which refer to fair value, fair value, fair value. So standard setters felt, yeah, will make a standard on fair value. So automatically we can do the valuation according to the principles and requiring the disclosure. So this is the objective. Scope of IndAS 113. Well, it is applicable when another IndAS requires fair value measurements. So whenever a particular IndAS tells, that time you will refer IndAS 113. So for example, 109 requires fair valuation of equity. But 109 does not tell how to do the fair valuation of equity. For fair valuation of equity, how comes from IndAS 113. Non-applicability, measurement and disclosure. Measurement and disclosure, it both won't be applicable for SBP, that is share-based payments, IndAS 102, not applicable. Leases, IndAS 116. Measurements similar to fair value, that is NRV in IndAS 2 or value in use in IndAS 36. Okay, so I have a question. Measurements and disclosures are different. They are quite different. Measurement means you are giving value. When I say you are giving a value, typically these values will be reflected in your financial statements. Matlab, they come in your balance sheets. Okay. Whereas disclosures are typically below the balance sheets, forming a part of your notes to accounts. So they are two very different concepts. So for these items, 1, 2, 3, IndAS 113 is not applicable. So valuation under IndAS 102, ignored. Valuation under IndAS 116, the standard tells how to do the valuation. NRV, IndAS 2 tells us how to do the valuation. IndAS 36 on impairment tells us how to do the calculation of value in use. So for all these items, your IndAS 113 is not applicable. In the second non-applicability, only disclosures are not applicable. That means measurement is applicable. Measurement is applicable. That means measurement principles, where are you going to look at? Sir, IndAS 113. Disclosure, where are you going to look at? In the respective standards. So plan assets at fair value. Disclosure under IndAS 19, fair valuation as per IndAS 113. Assets for which recoverable amount is fair value less cost of disposal, IndAS 36. You refer to IndAS 113 for what is the meaning of this fair value. What is the meaning of this fair value? Okay. All right, so I leave this. This is the case where fair valuation is applicable. IndAS 105, 109, 16, and biological assets. Typically, it's just an illustrative list. Okay, what is fair value? We have discussed price. We have discussed market participants. We have discussed appropriate market. In an orderly transaction, orderly means what? No stress. No distress, no coercion. It should be a free selling transaction. It should be a free transaction. And measurement date means the date at which you want the fair valuation to be conducted. The date at which you want the fair valuation to be conducted. If it is at the reporting date, then that itself will be your measurement date. Okay, so these are the 5 limbs. We've discussed all the 5 in detail. I told you, I have discussed entity specific restrictions are ignored. Asset or liability specific restrictions are considered. The road passing through your plot of land, you will consider. The sea facing view of your apartment, you will consider. You will consider them. Entity specific restrictions, bulk quantity discount, ignored. So all these are bargaining power, ignored. All these things are not going to be considered while determining the fair value. Okay. So just go through this one. All these examples you can go through. I don't think you need my help for that. Okay. There is one aspect of unit of account. I'll come to that in a little while. Okay. Market participants we discussed. It is from the perspective of a market participant. Okay. What are market participants? The parties which transact in their best economic interest. So this is clear. Independent and not a related party. I explained, if related parties are done at arm's length price, then it can be between related parties also. So I explained that also. Should not be under any stress or force, orderly transaction. All parties should have reasonable and sufficient information about the same. Okay, so you can go through this example. We discussed appropriate markets. What is the meaning of principal market? Market, normally the place in which assets or liabilities are being transacted with highest volume, I told you, if there is a principal market, the price in this market only must be used, even if the prices in the other market are more advantageous. Even if prices in the other markets are more advantageous. हमें यही देखना है. Principal market is there. We will look at the principal market only. We will not look at the other markets. But if principal market is not there, we will move to most advantageous market, which maximizes the amount received. That is your net proceeds. And what is net proceeds? Available price minus transport cost minus transaction cost. In absence of principal market, you will use this market. In many cases, most of the cases, principal market and the most advantageous market will be the same, because you are doing business. So your job is to ensure your proceeds are maximized, and therefore both of them will typically be the same. Okay. So this one you can go through these examples. Yes. If you have any doubts, you can obviously ask me. Price, I told you what is fair value. Available price less the transportation cost, and net realizable value or net proceeds is fair value minus the transaction cost. That is basically available price minus transportation minus transaction cost. Transaction costs are not a characteristic of an asset or a liability, but it is a characteristic of the transaction, and that is why it is considered for net proceeds but not for the purposes of fair value. Okay. Transportation cost incurred to transport the asset, it does change the characteristic of the asset and hence deducted from available price. Okay. So with that, we have concluded this part. Okay. We will do one practical question after a break, and then we shall move on to valuation of non-financial assets. Okay. All clear? Are you guys able to understand? Yes. Have you understood so far? You don't have to worry. It's an easy standard. Okay. All right. Manini, I'll address your query after the break. Okay. Take a break. All well? Yes. Srishti, Goyal, clear. Others, all well. So we take a break and we resume at 9. It's 8:53. We resume at 9. Okay. All right. We resume at 9. Okay. 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 All right, guys, welcome back. So we were discussing IndAS 113. I rushed through all the slides that we have covered. I have some couple of queries that were asked. One is, okay, now if you look at the applicability or non-applicability, that is the scope. If you look at the scope which is there, 1 second, where is that? Yeah. See, measurement and disclosure. This is not applicable. IndAS does not apply to such items in these cases. Okay. IndAS 102. There is a fair valuation of your share-based payment options. IndAS 116, there is a valuation of your lease ROU asset and lease liability. Certain items are similar to fair value, but they are not fair value. So therefore, IndAS 113 won't be applicable to them. For example, IndAS 2. For example, IndAS 2 or value in use in IndAS 36. Okay. So IndAS 2 NRV is not fair value. But sir, आपने example तो दिया mangoes का. That was to make you understand the concept. Okay. If I started off with land, I cannot explain transportation costs. I took the help of transport costs so that you can understand what exactly we mean by transport costs. But ultimately, if we consider inventories NRV is given in IndAS 2. So therefore, you cannot apply IndAS 113 principle and say that NRV is equal to fair value. So Jay Srivastav, for that reason, NRV cannot be equal to fair value. Both are totally different. Both are totally different. Okay. Coming to the next part, there was a query saying that, for example, if a vaccine is not yet available in the market, what will be the fair value after it is available in the market? Again, I presume that you are talking in terms of inventory, the vaccinations that you would be producing. That is an IndAS 2 topic. You can choose various ways in which you can determine the pricing. Typically, if a market is not yet priced, is not yet available in the market, you can follow a cost plus method of pricing, which you would be studying in your SCMPE paper. Okay. So cost sheet, say you find out the cost, absorbing the overheads, add a profit markup, and you should be getting the price. Okay. So that is the subject matter of that. If you're talking about the technology, that is the intangible asset that you have created while producing the vaccine, then yes, you will have to see whether you can fair value that. And if since it is an intangible asset, it would be covered under IndAS 38. Is revaluation permitted for intangibles? Yes, provided there is an active market. If there is an active market, go ahead and do the valuation based on IndAS 113 principles. Is it okay? Yes. And then it talks about value in use. Two things it talks about relating to IndAS 36. So IndAS 36 deals with what? Sir, this deals with impairment. Sir, what is impairment? If the recoverable amount of an asset is lower than recoverable amount of an asset is lower than carrying amount. That means carrying amount or WDV is greater than recoverable amount, then your asset is said to be impaired. Then your asset is said to be impaired. And now if your asset has been impaired, you have to give a debit to the P&L. What do you mean by recoverable amount? It is higher higher of two things: value in use or fair value less costs to sell. For this part, IndAS 113 is applicable for the fair value portion. Fair value portion के लिए IndAS 113 is applicable. Whereas for value in use, this is not IndAS 113's domain. What is value in use? Present value of cash inflows from the continued use of that asset. So this is solely related to the entity. It's not related to the asset per se. And therefore, it is an entity specific value. It is an entity specific value. And therefore, IndAS 113 is not applicable. IndAS 113 not applicable. Have you understood? Yes. So that is exactly what they mean here. NRV not covered under IndAS 113. Value in use not covered. Whereas in the recoverable amount measurement, fair value less cost of disposal, disclosure is not covered, but measurement is covered. Measurement is covered. Okay. All right. So that takes care of all that part. Let us now come to some questions. I'm leaving this question for homework. बहुत ही simple है. Please do this. You should not face any difficulty. I'll be doing different question. Okay. But this is also again very simple. Okay. तो कोई difficulty नहीं होगी आपको. But it's quite a simple question. Okay. All right. This is not there in your study mat. Okay. It's not there in your RTP. This is just an extra question. Okay. Isha Limited operates in the agricultural sector, and apart from farming activities, it also has a division that is retailing agricultural vehicles. Retailing matlab selling. So it is selling agricultural vehicles. Agricultural vehicles are inventory. It means agricultural vehicles are inventory. It is currently evaluating a proposal involving sale of the division. This is not sale of vehicles. This is sale of the entire division. So this is covered under IndAS 105. Non-current assets held for sale. Non-current assets held for sale and discontinuing operations. Okay. So here, what is the principle of IndAS 105? Any non-current assets you intend to sell, you will have to state it at fair value less cost to sell. And what is this fair value less cost to sell? Fair value is as per IndAS 113. So don't read the question and fat karke jump to the conclusion, sir, vehicle to inventory hai. Inventory 113 is not applicable. No. You are valuing the vehicles for the purpose of selling the division. So it's totally different. It's totally different. And accordingly wishes to fair value the inventory of vehicles for the purpose of sale. So they are two different transactions. Agar khali inventory hota, 113 is not applicable. It is a division of which inventory is a part. Fair valuation will be applicable. Do as per IndAS 113. 3 markets exists for the agricultural vehicles within which Isha has transacted regularly. It wishes to determine the fair value of 250 identical new vehicles as on 31st March 20X9. The prices are as under. You have 3 markets, Uttar Pradesh, Punjab, Odisha. Selling price is given. Historical volumes sold by Isha Limited across the 3 markets is given. Total volume of vehicles sold in the market. This is the market. Okay. This is Isha. Transaction cost per vehicle is given and transportation cost to the market per vehicle is given. Isha Limited wishes to value the vehicles at 3,91,000. How did they get 3,91,000? 4 lakhs. minus 5,000 minus 4,000. Okay. As it is the highest net proceeds, and also Uttar Pradesh is the highest market for Isha's vehicles. So you can see 10,000 in Uttar Pradesh. Isha seeks your advice as to whether this valuation is acceptable under IndAS 113 fair value measurement. Chalo, quickly answer this. Quickly answer this question, guys. You should be able to get this answer. ध्यान दिए हो, समझ में आएगा. Quickly get the answer to this. Okay. Sanket, is your query related to this topic? I don't think so. Are you talking from IndAS 113 perspective, or you want a general accounting treatment? Come on, guys. Solve this question. Okay. Okay, 3,96,000, 3,69,000. Give your answers. Manini, Aniket, Srishti gave an answer. Sandhya, Balram, Sumit Jain, Aniket Jain, Randhir, Kaushiki. Come on. Give your answer. Okay, Manini, answer do. Punjab. Okay, Manini gave the answer. Soham gave the answer. Okay. What about the others? Okay. So now, how do we look at it? Bhai, the company has given a valuation to you, 3,91,000, and now they are asking whether it is correct or not. So typically when such questions come, most of the cases it will not be correct. Most of the cases it will not be correct. You will have to look at reasons why it won't be correct. Okay, see, first of all, it is the entity which is evaluating, and because the entity per se is evaluating, it is interested in maximizing the fair value. It is interested in maximizing the fair value. So there is an inherent bias, okay, which is exactly what auditors must check and evaluate. Okay, so now if you look at the markets, well, it appears that Uttar Pradesh is the principal market. It appears. But wait a minute. Do we look at principal market from the perspective of volumes sold by Isha Limited, or do we look at it from a market perspective? Sir, we look at it from an overall market perspective. And when we look at it from a market perspective, I notice that the principal market is actually not Uttar Pradesh, but the principal market is Punjab. Because out of roughly 9 lakh 30 plus 2 plus 3, so out of roughly 12.5 lakh vehicles, 9 lakh 30,000 is sold from Punjab itself. That means nearly 75 to 80% of the market is in Punjab. So can I say that Punjab constitutes a principal market because maximum number of transactions, maximum buyers, maximum sellers are all located in Punjab? Answer is yes. So will I say that Punjab is most advantageous market, or will I say that Punjab is the principal market? Sir, Punjab is the principal market. Punjab is the principal market. And because Punjab is the principal market, we will not even look at which is my most advantageous market. नहीं चाहिए अपने को. So Punjab is principal market. तो पंजाब की कहानी देखो. 3,80,000 is selling price. Will transaction cost be covered? No, because it is a transaction specific cost. It's not asset specific. Will you cover transportation? Yes. So what will be your fair value? 3,80,000 minus 7,000 for one tractor into 250 tractors. So this comes to 9.325 crores, if I'm not wrong. Manini gave the right answer. Soham gave the right answer. Jay Srivastav and Srishti, you may have gone wrong in some calculation. Otherwise, you gave me the right conclusion. Principal market should be Punjab. That's right. So Jay, you can also just check. Both your answers are almost same. You may have done some mistake or something. Okay. You cannot take 4 lakh as this selling price minus 4,000. No. 4 lakh market ही अलग अलग है. You are saying 4 lakh Uttar Pradesh का price and you are saying transaction cost of this one, or you are saying 4 lakh minus 4,000. नहीं ले सकते because it's not the principal market in the first place. So we will be looking at 4 lakhs. It is my principal market. But when I talk about principal market, it is from the market participants' perspective. It's not from my perspective. That is why Punjab is the principal market, and therefore that will be the basis for our calculations. Have you guys understood? Srishti, did you follow? Yes. Clear? Okay, great. All right. Srishti, did you follow? Yes. Okay, Sanket, I'll take your question towards the end. Okay. Srishti, did you follow? All right. Okay. All right. So then with this, let us continue to the next part. Okay. Okay. Sir, when will a market be principal? When will, is there any percentage guidelines? Is there, and I don't need you to multiply, wo theek hai, but it's fine. Okay. All right. Now tell me, where was I? What was I discussing? Okay. Achha. Principal market. Normally this question should have come. I'm happy it did not come. Okay, I'll discuss it. Sir, principal market means you say maximum buyers, maximum sellers, maximum सब कुछ maximum. Percentage क्या है? What is the percentage? If say market A and market B, this is 99%, this is 1%. Sir, it's clear that A is the principal market. This is 80, this is 20. This is 51, this is 49. This is 50.1, this is 49.9. What is my principal market? Well, the cases are very clear here. Okay. But in these cases, it is slightly blurred. We can tend to say that there is no principal market. You know, what is this? 51, 49, 50.1, 49.9. What are you trying to prove? Okay, the standard has not prescribed a particular threshold कि इतने transactions हुए तो ही it becomes your principal market. That threshold is not prescribed in the standard, and therefore we will also not put it. If we are getting something close like 51, 49, 50, 50, etc., then we can say that there is no principal market. And if there is no principal market, we can move on to look at the most advantageous market. We can move on to look at the most advantageous market. Okay, so that takes care of that question and principal market. So today, right now, we have covered principal market. Right now, we have covered definition of fair value. We have done the scope of IndAS 113. We have completed all the legs of the definition. We saw one numerical example also. हमने जो कुछ भी questions कहे आपसे खुद से करने के लिए, please कीजिएगा. ओके, प्लीज कीजिएगा. बहुत सिंपल क्वेश्चन है, सिंपल थियरी है. आई थिंक यू शुड बी इन अ पोजिशन टू सॉल्व इट प्रॉपरली. ओके, सो नाउ कमिंग टू द नेक्स्ट पार्ट, assets can broadly be divided into two parts. One is financial assets and the other is non-financial assets. Okay, financial assets means shares, debentures, securities, etc. Okay, और भी बहुत कुछ है, but right now this is sufficient. Okay, non-financial assets means building, plant, machinery, ये वो, everything. Okay, other than financial. Now see, financial assets, you buy financial assets for 2 to 3 things. That's it. First one, passive income. Passive income in the form of dividends or interest. In the form of dividends or interest. The second one is capital appreciation. Capital appreciation. Third one is hedging. You enter into these interest rate swaps, forward futures contracts, etc. So that is hedging. Okay, तो ये 3 चीजें हो सकती हैं. इसके अलावा, apart from this, there is no absolutely any reason why you would make investment in a financial asset, and therefore valuation of these assets becomes quite simple. Valuation of financial assets becomes quite simple. The problem arises with non-financial assets. Okay, इसमें it is defined streams of cash. मेरे को मालूम है इंटरेस्ट कितना है. I know what is the principal. I know what I'm going to get back. So I can do an easy fair valuation. And more often than not, these instruments would be traded on the stock exchange, in which case मेरे पास fair valuations directly मिल जाएंगे. So therefore, this is absolutely clear. This is absolutely clear. It is simple, easy to evaluate. Okay. Coming to non-financial assets, let us talk about 2-3 examples, and I'm sure you can appreciate. Suppose you have an immovable property, that is land. सर लैंड का आप क्या कर सकते हो? व्हाट कैन यू डू विद द लैंड? वेल, लैंड का कुछ मत करो, लीव इट आइडल फॉर कैपिटल अप्रिसिएशन. ओके, नहीं सर, आइडल तो नहीं रखना है, कुछ तो बनाना है, बनाओ. रेसिडेंशियल कॉम्प्लेक्स, हु इज स्टॉपिंग यू? नहीं सर, रेसिडेंशियल आई एम नॉट वेरी इंटरेस्टेड, बनाओ कमर्शियल. सर प्योर रेसिडेंशियल, प्योर कमर्शियल, आई गेट बोर्ड. हाइब्रिड, ओके. सर कंस्ट्रक्शन में मजा नहीं है, फार्मिंग. सर फार्मिंग भी अच्छा नहीं लगता. पार्किंग स्पेस. सर पार्किंग स्पेस भी अच्छा नहीं लगता. लीजर पार्क, इमेजिका टाइप्स. सर लीजर पार्क भी अच्छा नहीं लगता. एग्जीबिशन स्पेसेस. सर दिस ऑल्सो आई डोंट वांट. डंपिंग ग्राउंड, कचड़ा आके फेंको, मेरा जमीन है, वॉट एवर आई वॉन्ट आई विल डू इट. एनीथिंग एंड एवरीथिंग कैन हैपन with an asset like this. Sir, another example. You purchase a vehicle. अच्छा, vehicle आपने खरीदा क्यों? Why did you buy? Sir, own use. Okay. Sir, own use के लिए नहीं. I can rent it out. Rent out. Taxi. Third, self drive. Rents. Fourth, आई कैन ब्रेक द व्हीकल्स एंड सेल इट एज स्क्रैप. वो मेरा धंधा है, मेरे को समझना है अंदर का क्या क्या रहता है, कैसे कैसे रहता है. सो आई कैन सेल इट एज स्क्रैप आफ्टर ब्रेकिंग डाउन ईच पार्ट. मतलब आई कैन डू एनीथिंग एंड एवरीथिंग विद द नॉन फाइनेंशियल एसेट्स. In other words, financial assets have a limited life, a limited purpose, a limited purpose, whereas non-financial assets purpose is huge. मतलब anything and everything under the sun you can do it with your non-financial assets, and it is acceptable, and it is acceptable. So it becomes difficult for us to understand why or how to value an a non-financial asset. See, for each of these items, the valuations are going to be different. कार खुद यूज करोगे, वैल्यूएशन विल बी डिफरेंट. यू गिव इट आउट एज अ टैक्सी, वैल्यूएशन विल बी डिफरेंट. यू ब्रेक द कार एंड सेल एज स्क्रैप, द वैल्यूएशंस आर गोइंग टू बी डिफरेंट. Likewise for the immovable property or land. And therefore, how do I determine what is the use of this non-financial asset basis which the fair valuation can be done? How do I determine? So we look at the fair valuation principles, and what does it tell is, for non-financial assets, we are going to follow the concept of highest and best use. We are going to follow the concept of highest and best use. From whose perspective? From the perspective of, bolo, from whose perspective? From entity's perspective or from the market participants perspective? किसके perspective से you will look at highest and best use? From whose perspective? From whose perspective, guys? When I talk about highest and best use, is it from the perspective of the entity or the perspective of the market? It will be from the perspective of the market, my friends, not the entity. Remember, you are doing fair valuation. Fair valuation is a market participant specific value. It is not an entity specific value. I understand why did the guys or girls who said entity specific said so. They would have said so because they would be thinking that, sir, अपने को क्या मालूम market participant क्या करेंगे? Sir, how will we come to know what the market participant will do? I know what I will do. So highest and best use will be determined from my perspective. Probably this was the thought process that made you give the answer that it is an entity specific perspective, which is not the case. You are going to look at the highest and best use from the perspective of the market participant. From the perspective of the market participant. Market participant क्या कर सकता है इसके बारे में मेरे को कैसे पता? How will I know? Well, some things you would obviously know. Some things you would not know. So whatever you would obviously know, you can consider that for sure. You can consider that for sure. So for example, when I talk about highest and best use, I know what will be the fair value of the land for commercial. So if I sell it to any market participant, यार commercial तो आकर बनाएगा ही. So that will probably be your maximum. Sir, hybrid may be even costlier. Sir, what you can say, leisure park may be even costlier because it results in a lot of revenue. So if that is the case, how would you do the valuation? How would you do the valuation? From which perspective? What would you say would be the highest and best use? So the standard gives a small T and C apply. So when they say highest and best use, it comes with a small terms and conditions apply. What are the terms and conditions? 3 conditions are there. Such use should be physically possible. Second one, it should be legally permissible. And third one is financially feasible. These are the 3 things which I have to think about before deciding at what is the highest and best use. Suppose you have this plot of land which is situated in a commercial setup, okay, and the size of the land is 10,000 square meters. Now 10,000 square meters may obviously you cannot set up a water park or a leisure park, okay. So it is not physically possible and therefore it is eliminated, You cannot dump the garbage because it is in the vicinity of commercial complexes. So dumping ground is eliminated. Parking area could be eliminated. Yes. Farming could be eliminated. Yes. Likewise, you will have to look at each of these conditions that are fulfilled, and basis that you would determine what is the highest and the best use in respect of financial, non-financial assets, in respect of non-financial assets. Is it okay? Have you understood? Yes. You are not supposed to exhaust all the possible uses. इर्द गिर्द में जो कुछ भी uses हो रहे हैं, that is enough for you to decide what will be my that is enough for us to decide what is going to be the highest and best use. आजू बाजू में क्या हो रहा है? Okay. All right. And finally, the standard tells, and rightly so, that many times, or most of the time, current use is highest and best use. Current use is the highest and best use. Dekho, you are a business entity. So when you buy an asset, you will obviously put it to the best use which is possible. So when we say current use is highest and best use, it is based on the fundamental premise that I am a prudent business entity and I will focus on giving the I will focus on the current use which maximizes the returns. So current use is the same as the highest and best use. Is the same as the highest and best use. Is it okay? Yes. For example, you are having land in a commercial complex area and you want to do mining there. Is it even physically possible? Mining के लिए कितना जगह चाहिए? आपके पास कितना है? Yes, is it even possible? It's not. So therefore, it should be physically possible, legally permissible, and financially feasible. This is the fundamental principles behind non-financial asset valuations. Okay. So we come back to our notes. It is a valuation concept for non-financial assets. It must be physically possible, legally permissible, financially feasible. Rat lo isko. It is a very, very important phrase. Obviously, you don't have to by heart it. It's common understanding. Okay. It does not matter whether the entity intends to use the asset differently. It is determined from a market participant perspective. To find out the best possible use, identify the market participants and then find the best legitimate use of this non-financial asset. Okay. All restrictions specific to any market participant would not be considered while finding out fair value specific to any market participant. That means they are talking about restrictions which are not asset specific. They are talking about restrictions which are entity specific. You will not consider that. In absence of potential best use, current use would be considered as the best use. When considering fair value under any alternative use, deduct the estimated cost to be incurred in order to make the asset ready for alternative use. Okay. So fairly simple non-financial assets. कुछ करने की जरूरत नहीं है. It's quite manageable. Okay. All right. So I want you to look at this question. 13. Okay. And question 2 also. I need you to do this question 6.1 also. So you will be in a position to understand non-financial assets. Have you understood so far? Have you understood? Yes or no? Am I too fast? Guys, honestly, please answer. Restrictions specific to entity will not be considered. Jay Srivastav, look at the term, look at the words. Restrictions specific to a participant would not be considered. So entity specific would not be considered. Why are you going to consider that here? You are transferring asset, not entity specific restrictions. Okay. Okay. All right, good. So that takes care of valuation of non-financial assets. See, if at any point of time I'm going fast, please let me know, because I just have to complete the syllabus within the time. Okay. And I have been a little notorious on that. Okay. Last time I have taken so many batches and always exceeded the time gap. Okay. So that is why I'll be a little fast. In any case, I have been instructed that these topics which will be covered, some of them will be problem solving and doubt clarifications. So you should be in a position to review the earlier batches videos also. Okay, to get a better understanding. All right. I will tell you whenever I refer, like for example, IndAS 113, I've practically covered everything that I had covered the last batch. I am little bit fast compared to what I used to be. Okay. Like non-financial assets, I would typically cover it on the second day after a 3.5 hour session the first day. But this time I have covered it because जो भी मुझे समझाना था समझ में आ गए and समझा दिया, and most important is you guys are reverting back and responding, so that makes the things easier. Please continue with that. Okay. Coming to the next part, which is valuation techniques. Okay. Okay. Now, valuation techniques. When it comes to valuation techniques, what exactly do I mean by valuation? What exactly should I do under valuation? Hona kaise chahiye? That is what you are going to discuss in valuation techniques. So the standard gives you one thumb rule. First one is maximize the use of observable inputs. And what is the next one? Maximize the use of observable inputs, minimize the use of non-observable inputs. So these are the fundamental rules for valuation. Maximize the use of observable inputs. What do you mean by observable inputs? Quoted prices, prices available on the stock exchange, on the commodity exchange, readily available without any judgments. So maximize the maximize the usage of these inputs, minimize the usage of non-observable inputs. What do you mean by non-observable inputs? Input ही नहीं है. You will have to estimate, you will have to calculate, you will have to frame, and there could be a lot of bias involved in the usage of non-observable inputs. And that is why we will focus on maximizing the usage of observable inputs, Okay, so this is the fundamental rule which is there. We will be discussing this rule, the application of this rule in detail in tomorrow's session. Okay, in detail in tomorrow's session. I will need you to just go through this one extra slide and come tomorrow. Okay, just this one. So till 26 number, I will need you to go through and come back tomorrow. So then we can directly proceed from here. Okay, so our class is next on Saturday. I have a couple of queries, so I'm keeping the last 5-10 minutes for query solving. So till slide number 26, can you read and come on Saturday? Yes, can you read and come on Saturday? Srishti, Manini, Jay Srivastav. Yes, can you please read? Soham, please read and come. Okay. थोड़ा सा अगर आपको लगा I am fast, then you can refer the previous batches sessions also. Okay, I'll share the link. Okay, I'll share the link with you. Maybe in the it's there, I think, on ICAI channel batch 4. You would be having the sessions, so you should be able to view that. Okay, all right. Now coming to the queries. Sir, current use is the highest and best use. Most of the cases, yes. So then also the market participant perspective is considered in the non-financial asset. See, current use means asset kiske haath mein hai? Asset is in your hand. And because asset is in your hand, your highest and best use and current use are more often than not the same. So therefore, you do not have to do the entire exercise of evaluating each and every usage, because when you are putting the asset to a particular use, देखो, जब आप asset खरीदोगे, when you buy an asset, simple thought process, when you buy a mobile phone for yourself, what is your intention? I want to make calls, I want to access the web, I want to connect on WhatsApp, and टाइम पास में एक दो गेम खेलना है. That is your basic intention. You do not have fancy things like I have to I have to guide my spaceship in the takeoff that is going to happen. All these kind of fancy things you will not be having. So therefore you buy a phone that meets all these 4 requirements, and ultimately the current use is the maximum, is the best possible use. That is the fundamental presumption that is there for non-financial assets. When you invest in a machine, you buy a machine, Your job to use that machine maximizes your use. You do not buy a machine to disintegrate and sell it as scrap. You do not buy a machine to give it on rent. You buy a machine so that you can use it and develop the products and then sell the products ultimately. So that is the reason. So your current use more often than not will obviously be the highest and best use. Market participant ka fir usme they will also look only at that aspect. Okay, so that was her question, Srishti Goyal's question. Coming to who is that? Salunke, Sanket Salunke. If a free sample is provided and if such samples are damaged and called back by the entity for correction, what will be the accounting treatment? It depends on what entry you have passed when you have sent the goods. It depends on what entry you would have passed when you had sent the goods. Basis that you can treat the entry as, basis that you can decide what should be the treatment on receiving the returned goods. On receiving the returned goods. Is it okay? Yes. Any doubt so far? No doubts? All clear, everyone? Yes. Great. So Srishti Goyal has confirmed. See you guys on Saturday. We will meet and conclude 113. Sunday, we are having a class on 116. So see you guys on Saturday. Okay. Thank you, everyone. Thank you. Have a nice day. Revise and come. Revise and come. पढ़ के आना. ऐसे ही मत आना. Okay. Good to have you, and I look forward to seeing you, Sudhir, Sanket, Manini, Jay, Soham, Srishti. Okay, Sandhya, Gauri, Balram, all of you, I look forward to meeting you. Girish, Kaushiki, all of you, look forward to meeting you on Saturday. Okay, all right. Thank you. Take care. Bye bye.